All right, welcome to another session of the My Solo 401k Financial, my community daily webinar series. If you have any questions or topics you'd like to discuss, please chat those over. I see we've already got a few questions or topics, which we appreciate that. Today's topic, just to tee it up, is Betterment Solo 401k review, how it compares to a self-directed solo 401k. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Let's jump in with the questions that are already in the queue, knock those out, and then we'll go through the Betterment Solo 401k review. So first question, client over 50, $100,000 of W-2, has a solo 401k and a cash balance plan. So far, he has contributed $30,500 deferral. Sounds like this is for 2024. $6,000 employer contribution. Is he eligible to contribute another $40,000 to the after tax? So that's a great question. As a common scenario, it's not an uncommon scenario, at least, where someone will have a solo 401k plan through us and then also have a separate DB plan, a defined benefit plan or cash balance plan, a DBK effectively. And from a solo 401k perspective, making contributions to the defined benefit plan will not reduce how much they can contribute to the solo 401k. However, in order to preserve the ability to maximize contributions to the defined benefit plan, the employer contribution cannot be greater than 6%, which is what the case is here, right? $6,000 of $100,000, which means that the individual could make additional voluntary after-tax contributions to the solo 401k. So they can contribute 100% of their self-employment compensation, dollar for dollar, up to the overall limit, which is in this case $76,500 for 2024. Now they do have to reduce that by the employee contribution to $30,500 plus any employer contribution made to the solo 401k, which, as you note, would leave $40,000. But making voluntary after-tax contributions as well as employee contributions, in other words, the deferral, those do not reduce how much the individual can contribute to the defined benefit plan. It's only the employer contribution. So in short, the answer is yes. That's a great question. Thank you so much for bringing it. Just to confirm, solo 401k is owner-only W-2 wage $60,000. If no employee contribution, pre-tax or Roth, no employer profit sharing, can I do the entire whole W-2 wage $60,000 to the voluntary after-tax? That is correct, assuming that the individual has a solo 401k plan like the one offered by my solo 401k Financial that allows for the voluntary after-tax contributions. They'll want to make sure that they deposit those voluntary after-tax contributions into a separate account under the name and EIN number of the solo 401k, specifically for voluntary after-tax contributions. Now, making those voluntary after-tax contributions doesn't need to be reported on the personal or the business tax return, neither on the W-2 wages per those W-2 instructions. But the second step, which is to move the money from the voluntary after-tax account to either a Roth solo 401k or a Roth IRA, does need to be reported on a Form 1099-R. That's the second step of the mega backdoor Roth. So we prepare that Form 1099-R as an optional free service for our customers. They just need to let us know about that after-tax to Roth transfer by submitting the form on our website in a timely fashion. So you can access that form easily at mysolo401k.net/forms. Great question. When open solo 401k accounts at Fidelity verified my bank to take $1 from my bank. However, after the accounts were established, $1 was not sent back. Now it accumulated to about $65 over years in my after-tax account. What should I do with it if I transfer it to a Roth IRA? So the conservative approach would be to consider that amount to be part of the contribution for the year for which it was made. And then when you move the money from the after-tax account either to a Roth solo 401k or a Roth IRA, the subsequent gains, in this case $64, will be taxable. Because ultimately, when the money is deposited into that Roth account, either the Roth Solo 401k or a Roth IRA, it needs to be deposited as an after-tax contribution. And then likewise, the individual needs to let us know about that after-tax to Roth transfer by submitting the applicable form on our website in a timely fashion to give us the information that's needed to prepare the 1099-R. So if you go to mysolo401k.net/forms, you'll see that one form is for after-tax to Roth Solo 401k. The other form is after-tax to Roth IRA. All right, that's a great set of initial questions. We do appreciate that. And if you're finding this to be helpful, please like this video. Please share it with others that might find it useful. Whatever platform you're checking us out on, whether it's YouTube or LinkedIn or X or Instagram. And that'll certainly help us get the word out to other solopreneurs just like you. So we definitely appreciate that you taking the time to do that, to please like the video. All right, so now let's turn to the topic at hand, which is Betterment Solo 401k review, how it compares to a self-directed solo 401k. And if you do have additional questions, whether on other topics or on this topic, please just go ahead and chat those up and we'll go through those sequentially. So Betterment launched their Solo 401k for retail clients in August of 2025. And if you have not heard of Betterment, they are a robo-advisor. So in other words, that's their core value that they offer, essentially automated investing in a nutshell. So we wanted to take the time to review the published information on their website as of the date of this video and help organize it for those who might be considering Betterment for their Solo 401k plan. So of course, one of the key issues to consider is the fees, because there's plenty of studies out there, for example, that have just indicated that higher fees can have a tremendous impact on your retirement account balance, whether it's an IRA or a 401k or a solo 401k. While fees may seem small, over the lifetime of the account, they can really accumulate to a high balance and have a tremendous impact on your account. So per the information on Betterment's website, they charge an annual fee of $100 for their solo 401k, as well as an asset-based fee. Their base fee is 0.25%. Now, they do have a premium option, which even charges a higher asset-based fee. But for purposes of today's discussion, we'll just focus on the lower 0.25% fee. So when you run the numbers for those Betterment Solo 401k fee, it's going to be a function of the account balance. So it's important to consider, okay, what might your account balance be? So this can be a useful annual cost comparison. So for example, with the self-directed Solo 401k plan offered by my Solo 401k Financial, we charge a totally flat $125 annual fee, regardless of the balance, regardless of the support, compliance support that one might need for their Solo 401k, right? Whether it's a 5500 EZ or a 1099-R, like we were discussing in the context of a mega backdoor Roth, the fee is going to stay the same, $125. Now, with Betterment, as we just saw, they have a flat $100 annual fee, but then on top of that, they have an asset-based fee of 0.25%, which on the surface may seem to be relatively small, but when you actually run the numbers based on account balance, you can see based on this chart that it can really accumulate, especially as the years go by. So, for example, just taking $100,000, that's going to be $350 for the first year, right? $250, which is 0.25% of 100,000, plus the $100 Solo 401k annual fee. Now, if you start to go out over years, you can see based on this chart that the fees really accumulate, right? So over 5 years, that $100,000 balance would be $1,750. Going all the way out to 20 years, it's $7,000 versus the 20 years of annual fees charged by my Solo 401k would accumulate to $2,500. And then as the balances go up and the years go up, those fees really start to accumulate. So for example, a $500,000 account balance over 20 years, those betterment fees of 0.25% per year plus $100 a year would accumulate to $27,000. Whereas, as I noted up above, my solo 401k's annual fee is a flat $125 regardless of the account balance. So that would accumulate to only $2,500. So the betterment fee would be more than 10 times the amount. And then as the balances go even higher, for example, taking it to $1 million over 20 years, those betterment fees would accumulate to $52,000. So that's where the third-party guidance that I alluded to up above, this is a really good example of that, of how fees are something to definitely take account of as one is evaluating their solo 401k provider, because even though the fees might seem small on the surface, they can really accumulate to a significant amount as the value of your plan increases, as well as the years go by. So that's the first consideration when it comes to the Betterment Solo 401k review. The next is going to be the features. So this is a helpful chart as it helps to shed light on the features that are currently not available through the Betterment Solo 401k plan. So number one, Mega Backdoor Roth. So Betterment Solo 401k plan does not support Mega Backdoor Roth contributions, whereas the Solo 401k plan offered by my Solo 401k Financial does. In-plan Roth conversions. Betterment Solo 401k plan does not support in-plan Roth conversions. So Mega Backdoor Roth, just to circle back, is a way for someone to accumulate a relatively high amount of funds in their Roth account. So for example, for 2025, one can contribute potentially up to $70,000 where the funds end up in their Roth Solo 401k, or even a higher amount if they're age 50 or older. So with my Solo 401k Financials plan, that's one of the top reasons the customers set up the account. We have deep experience in guiding clients through the required compliance steps. For example, they have to open up separate accounts for the voluntary after-tax contributions, which is how one makes Mega Backdoor Roth contributions, as well as the compliance support, such as the 1099-R that needs to be issued when you transfer funds from the voluntary after-tax account to the Roth account. In-plan Roth conversions is another way that someone can add funds to their Roth account. So an in-plan Roth conversion is where one has money in a pre-tax account, which is then moved over to the Roth Solo 401k. So under the rules and under at least the plan that's offered by my Solo 401k Financial, our plan allows for in-plan Roth conversions. Now, of course, this is going to be taxable because one is moving funds inside their Solo 401k from a pre-tax status to a Roth status, as well as reportable. And we handle that 1099-R that needs to be issued to report that pre-tax to Roth conversion as an optional free service for our customer. But you need to have a plan that allows you to do those in-plan Roth conversions, and you're going to want to work with a provider like us that's going to issue the 1099-R. So Betterment Solo 401k plan does not support in-plan Roth conversions. The third item when it comes to maximizing funds in a Roth account is employer Roth contributions. So Betterment's Solo 401k plan does support employee Roth contributions, but not employer Roth contributions. This is a new type of Roth contribution that can be made to a plan thanks to the Secure Act. But you need, again, to have a plan that allows for employer Roth contributions. My Solo 401k Financials plan does allow for employer Roth contributions. Betterment Solo 401k plan does not. Okay, great. So moving on with some of the other top features that Solo 401k clients are looking for. Next would be a loan option. So if you have a plan that allows it, like the one offered by my Solo 401k Financial, you can borrow from your Solo 401k. So you can literally transfer money out of your Solo 401k account to your personal account, use the proceeds of that, transfer for any purpose whatsoever, personal purpose, a business purpose, and it's not going to be considered a taxable distribution as long as it's properly documented as a loan and paid back according to the loan terms. So we prepare the required loan documents as an optional free service for our customers so that you can satisfy that first requirement, that it's properly documented as a loan. Now, the loan terms are going to require that it's limited to no more than 50% of the balance, not to exceed $50,000. It's paid back in either monthly or quarterly payments, equal payments of principal and interest, with those payments spread over a 5-year term. But the key, again, the starting point is you need to have a solo 401k plan that allows you to take a 401k loan. And Betterment Solo 401k plan does not support 401k loans. Next is alternative investments. So many of our customers, of course, being self-employed individuals, they may be more comfortable or have experience with non-Wall Street type of investments, whether it's crypto or real estate, or maybe they're just looking to diversify, right? They want to have some of their money in stocks or bonds or mutual funds, but would also like to have some of their solo 401k dollars in alternative investments, whether it's real estate or crypto, private placement, private stock, pre-IPO stock, etc. In order to be able to invest in those types of investments, you need to have a plan that allows you to do so. And my solo 401k financials plan certainly does. And moreover, we have years of experience in providing educational support to our clients when it comes to the mechanics of making those types of investments. For example, how to invest in crypto, how to invest in real estate. Whereas Betterment Solo 401k plan is not going to support those types of alternative investments. 5500 easy preparation and electronic filing. This is a very important one. Once the value of the solo 401k plan, including the value of any defined benefit plan that might be sponsored by the self-employed individual, once the sum, if we're talking about a defined benefit plan of the solo 401k and the defined benefit plan, or just the solo 401k plan itself, exceeds $250,000, there's an annual informational tax filing requirement. The name of that form is referred to as a Form 5500EZ. So we handle that Form 5500EZ preparation and electronic filing to make it easy for the customer as an optional free service for our customers. Now, customers just have to let us know once the value exceeds $250,000, and then we'll add their plan to the queue to be able to prepare that 5500EZ. And I say it's important because the fees, the potential penalties here are significant. They recently increased over the last few years, so they're now $250 per day. So those penalties can become quite significant very quickly if someone neglects to file their 5500EZ in a timely fashion. So Betterment, with respect to Betterment Solo 401k, they do not handle Form 5500EZ preparation and electronic filing. Checkbook control. So checkbook control refers to the fact that as the self-employed individual, you are the trustee of your solo 401k. And so if your solo 401k plan allows it, you can open up an account at a bank or a brokerage that offers checkbook access to that account. And our plan certainly supports that. That's one of the top reasons or features that our customers are looking for. They want to be able to access their solo 401k assets via a checkbook. And the reason for that stems typically because they're looking to make alternative investments. They may want to be able to act quickly to take advantage of an investment opportunity by being able to write a check literally out of the account or do an ACH or a wire, etc. So with respect to Betterment Solo 401k, they do not offer checkbook control with regards to their solo 401k. Lastly, is the ability to open up an account for your solo 401k at the bank or brokerage of choice. So my solo 401k financial, we are totally neutral as far as where the account is opened up for the solo 401k. Now, at the same time, we're very hands-on in helping customers open up an account or accounts at the bank or brokerage of choice, including, for example, pre-filling the documents needed to open up the account at the bank or brokerage of choice, etc. Whereas with Betterment, of course, they're going to require that your solo 401k assets are with them, right? With their account. They're providing not only the plan, but also the account. So for our customers, again, that might want to make certain investments that are not available through Betterment, whether that's a certain mutual fund or perhaps, again, alternative investments or crypto, it's essential that they're able to open up an account at the bank or a brokerage of choice. Okay, great. And again, if you're finding this to be helpful, please like this video. Please share it with others that might find it to be helpful to help us get the word out. If you have some questions, additional questions, please don't hesitate to chat those over. We also invite you to subscribe to our channels, whether you're on LinkedIn or YouTube or X or Instagram, as we go live every day. And you can hear the topics that we like to share, as well as come and ask questions. All right, we got another question here. I'm going to modify my solo 401k with the auto contribution feature. I will claim the $500 credit. My accountant needs to file Form 8881. What line in the form to claim it? So let's see here. I'm going to tag your email and we'll follow up with you after today's webinar with a link to a webinar we hosted with an IRS enrolled agent that goes through step-by-step how to claim and how to claim the credit and how to complete that Form 8881. So I made note of that. Okay, thank you so much for the good question. With my solo 401k financial, will I be able to obtain qualified employer securities? So that is referring to what they've referred to as a rollover as business startup or a ROBS 401k. So we do offer ROBS 401k plans, but it's not through a solo 401k. It's definitely a very specific type of transaction. There's specific steps and requirements that need to be followed. So I would invite you to book a call using our online calendar at mysolo401k.net/book. So it's generally best to go over the situation one-on-one. Again, at mysolo401k.net/book. And all are welcome to use that calendar, whether you're looking to discuss a ROBS 401k or a solo 401k. Again, mysolo401k.net/book. Or we'll give it another moment to see if any more questions come through. Thank you so much for the great participation. We do appreciate it. We also want to invite you to our community. We have the largest community of self-directed investors and solopreneurs, which you're totally welcome to join. All are welcome. It's free to join. You can join easily at mysolo401k.net/my community. We've got over 30,000 members. We have vibrant communities. We have a library of videos and webinars. So there's a ton of ways to learn and to share the knowledge. We also have the industry's first AI, which you can access for free at solo401k.ai. All right. Well, looks like that takes us to the end of the session for today. Again, thanks so much for all the great engagement. Until next time, take care, everyone.